Hello guys. Good morning from here. It's 12:45 January 6th midnight over here. So I want to touch gold this week. Or I would say on this particular session, because most people requested for it. And before I forget, there is something going on based on phishing and what is it called? Cyber. What's it called? Um, Cyber fraud, something like that. All right, and this thing is most specifically focused on the crypto market. All right. So there are some YouTube channel that talks about trading, like all these finance channels that teach about money stuff like that. There are some people that goes around all of those channel commenting that they need help with transferring their USDT out of their safe power wallet. All right, and when they talk about problem they have with the safe power wallet, they always drop their key phrase. All right, this passkey that Trust Wallet gives, safe power also gives that 12 key phrase. All right, so now I know most of us, we see that and be like, you want to help the person, or you think the person has released you, has given you access to his account, and you go and use that account, you will get scammed. And if you actually have crypto on your wallet, you will get scammed. All right, so avoid cyber fraud and phishing of crypto coins. So back to this channel. We're looking into gold, and like we always do, we don't actually start from the lower time frame because you will not have a directional bias or what the market is doing. The first thing you have to do is go to the higher time frame, which has the bigger picture, and the lower time frame tells you when to have your entry. All right, and you are now making sure that the lower time frame finally aligns with that of the higher time frame, because if the higher time frame is bullish and your lower time frame is bearish, is kind of like a no. All right, because they are not working hand in hand. Okay, so for it to align, the both, like for it to actually work out, the both needs to align. So if you actually see a bullish bias on the higher time frame, the lower time frame is doing a pullback, which is that sell that it is doing in order to get a certain price level to align with that of the higher time frame, and that could be it trading into an area of order block, area of fair value gap, and also dealing with sessions. All right, so trying to align with the two time frames should align, the higher time frame and the lower time frame. Okay. All right, so we are now looking at gold, and we have already seen that gold has been bullish. Even if I zoom out, we've been bullish all over. And one thing I also want you to always please take note of your chart is that you should know that the market has three trend that it always do, or three structure of thing that it always print, which is bullish, also we have bearish, and then we have a consolidation or a ranging market or a sideways market. All right, these are the things that we should know. Three forms. All right, bullish, bearish, and then when it pauses. All right, and this stuff can be seen on your candles, maybe in other ways, like when we having all of these swing points, we can use that. Right now, another thing that we also do get to use this structure of a thing and the ranging of a thing is when we are looking at candles. All right, so like when we see these candles right here, these three candles, we are in a range. All right, so there is no structure given but a range, so you're dealing with the algorithm right here. That's what we call the algorithm D range. You're dealing with support and resistance. All right, you're dealing with liquidity. Candles range here also, you're dealing with liquidity. All right, even here, let me use this. Even here, candle ranged. All right, so it tells you that there is building of liquidity, there's support and resistance going on right there. All right, so you trying to go into lower time frame to mark out structures is kind of risky to you, because it is not actually a bullish or bearish structure, is a ranging market. All right, so that is when we use the algorithm D range of previous month highs and low, and then we now pay attention to when it sweeps that previous day high, previous month high, or previous week. All right, depends the one you want to use, but in this time frame that we are 1 month time frame, we are looking at previous month highs and low, and in that high that is a resistance, and that low, that is a support, that is a buy stop, that is a sell stop. So most traders are trying to sell from an area support, and trying to sell from area resistance, and this explains why the market hits your stop loss first before it goes to your intended direction, because you actually want to sell, but then it takes your stop loss first and then sold off. All right, that hunting of stop loss is the market, the algorithm, wiping all of those pending buy orders on the high, which is your stop loss. Your stop losses are the pending buy orders, even the buy stop limit or buy stop order that you place above an area resistance, that in the case of break and retest, that is also your stop loss. So the algorithm is programmed to sell to those pending buy order. That is why we refer to that high that has resistance has a Basel liquidity pool, because that is a liquidity pool. And remember, liquidity refers to money, and liquidity is an area where an exchange is done, the buying and selling is done. Since we have multiple of people trying to buy an certain asset, then if I want to sell a large quantity of units or quantity of whatever I have, then that means I need to have enough buyers that will buy those orders. So that is what it means. Liquidity pool resting right here. Majority of people wanted to sell, so you have people you want to sell it to, and then you sell it to them. That's why we always pay attention to hunt on previous move high. We'll look for the confirmation entry, and we're targeting previous move low, because we have this idea that people want to buy from that low, buy that stop loss raising the low. In most cases, sometimes it will not, sometimes it will go there. So that is why we are projecting 1 month, and once the month closes, we close the trade for our position trade, and when the next month opens, we can then know what we want to do next. We look for confirmation entries, and then we dive in. So gold has been bullish all this while, and it got to a point when it starts to range. We have entered a consolidation. Now this consolidation doesn't tell you that it needs to go bearish or it needs to go bullish. It just paused for a while, and whenever the market pauses for a while after going impulsively, it means that it's trying to build up liquidity. In this case, two things is what we're gonna have in mind, which is a distribution or a reaccumulation of price to continue going higher. When we're talking about distribution, it means that it needs to sell. We're talking about reaccumulation, it means that after a buy, it pauses for a while to collect more liquidity and then continue going higher. That's what we call a reaccumulation. If you study Wyckoff, you actually understand what I meant. The PDF is free online. Download the PDF, read the PDF on Richard Wyckoff. You actually understand what I meant. All right, so I've been using that for stock market. That is why we always buy at a discount price when it is doing an accumulation. All of the stock market I've been sharing is an accumulation. Remember, we buy stocks. All right, we buy stocks so that when it goes higher or the price increases, we are profiting from it. All right, we don't trade it, we are investing in it. Right, so those that trade, I don't know how you do that. Okay. So this is the monthly time frame. We delete all of this, and normally I say that I will not be trading this January. Maybe I could start focusing from the 3rd week of January and dive in on February 1st or 2nd week. So this is our previous month, right? Now we go down to the weekly time frame. We can actually see from our weekly time frame that this stuff is bullish. It's then bullish, right? So what is our swing highs and lows? This is a swing high right there, and then this is our swing low, and this swing low traded to the nearest fair value gap that we have right there to the 50% and showed a reaction to go higher. So let me just take this off. Thank you. Alright, so it showed a reaction to go higher. Alright, you understand? Now when it did go higher, the next thing that we were expecting is that it needs to go to this high, give us a new high. But what it did was that it did not do that. It paused, and that is it reacting from this sell side inefficiency, right? So it traded into the sell side inefficiency the first time. I'm trying to not draw too much on the chart so that it could look neat, but I think I will use this. Alright, so we traded into the sell side inefficiency, and normally when price trades into an area of inefficiency and we want to see it continue selling, we will see a structural break. Alright, so it tells you it balanced the sell side, breaks a bullish trend, then shifts to a bearish trend, and we're confirming that you want to sell, and then we go in to sell. Now in this case, we traded into the sell side inefficiency, trade high and trade lower. It pulled backwards again, still inside the sell side inefficiency. Yeah, still inside the sell side inefficiency, and it starts to sell. Now when I'm seeing this sell, the next thing that comes into my mind is for it to go to this low. Now when it goes to that low, I'm saying alright, is wanting to shift. When it breaks it, that is when we have a candle breaking this low and the next candle trading lower and closing below this low, alright, then that is a clean confirmation of me saying it's a break. It's a change of character, alright, not a break of market structure. It's a change of character. Now when the change of character is formed, I'm expecting it to come back high, trade into an area of inefficiency from the sell side, tap a bearish order block, and show a confirmation on the lower entry, and that will take the sales. But in this case, we still haven't break this low, so I'm not confirming it bearish. So what I want to do is take this off, and put this here. Now what am I trying to do? Most of you already know what I want to do, but I will say it by the way. What I'm trying to do is identify range high and low. Why? Because this has started ranging. I think I need to put previous month highs and lows back. Change this to pixel 2 pixels. Alright, this is my high, this is my low, and we entered a range. Previous month low, previous month high, right there. Now we are going to do one more thing. Since we are now in a new week, we have to mark our previous week high and low. So previous week low. So you got, the reason why I'm changing colors is so that I can easily identify these when I run down to the lower time frame. And then previous week high. Now if you pay attention to this previous week high, right, you can tell that it is equal with this high that I just drew the line from, right? So we are referring to that as Basel liquidity pool. I will abbreviate it as BSL, Basel liquidity. Alright, then in bracket I will also call it a resistance level, alright, because it tapped two times. The market respected that price twice. Resistance. Full stop. And we'll leave it that way, or should I increase the text to 12? Alright, so buy side liquidity, we are having a resistance level on the high and resistance and previous week high. Okay, I think I should just put it back to 11, and my text should be at the middle. Nope, left, right, center, put at the top. Alright, don't mind me guys, just trying to make this look interesting for me. Alright, so leave it that way. So now this one is our previous week low. Alright, so that is it. Now we shall now go down to the lower time frame. We have already seen price sweeping liquidity from this low. That was a liquidity sweep. We also have another liquidity sweep right here, so we'll use this to indicate it. Now what I'm trying to do here is giving me a bias, like trying to give myself confidence that I'm labeling all this stuff. All right, so it's like teaching myself also. All right, telling me that all right, this is that. It helps a lot. So we have the buy stop on the high, so the market, it needs to be drawn to every high is a buy stop. So this would be buy stop from previous month high. All right, and this would be sell stop from previous month low. So that's just how I analyze, guys. I take time to analyze. Put this at the bottom, go back to text. Okay, I'm reading out the text, so put that previous month's low. Okay, then close bracket. All right, so we are done labeling and analyzing the weekly time frame. This will give us a bias as we keep going down to lower time frame. So I will lock this, I will lock this one, then finally lock the external structure, external swing high and low. All right, these are the external thing that we are dealing with. All right, so we are inside, all of this is inside this major high and major low, external high, external low. This is the major thing we are dealing with. So we are paying attention. I want to be in a trade that will go to this high or this low. All right, and breaking down the analysis, going down to lower time frame, that is something that will help us know. All right. So now we are on the daily time frame. Now if you look very closely, you can actually tell that we don't have any idea what the chart or the market wants to do, for the reason of what this is a ranging market. All right, you can actually see it, actually see it range. All right, not a structure, so you should understand that. Not a trend, sorry, not a bullish trend or bearish trend, how I put it, but just know that currently from this point we were ranging. All right, so in this case you're not saying that the market is bullish or the market is bearish, you say that the market is consolidating. Now this is my daily time frame. All right, this is my daily time frame. So this high and this low is our internal range high and low and internal liquidity. All right, this is what we're actually dealing with. Now our 50% price has already traded into 50%. Even the middle price of 61 and 50, right, is also tapped into it, then try to sell. So that is it. We traded above into the equilibrium price of this high and this low. So liquidity sweep right here, not a structural break. All right, because while I am not referring to it as a structural break, is because this is not a bullish printing. All right, so I don't say it's a break of market structure or a change of character. It's a liquidity sweep to me. All right, then we trade high to fill up this sell side inefficiency from this sell candle. Range right here. All right, range. So we have support, we have resistance. All right, resistance and support. The first thing the market did was to first of all go and take stop loss from the area of support, taking the words liquidity that was resting right there. I hope you understand this. That makes it clear, right? And then trace higher. To do it, go for the buy stops or buy side liquidity pool. Then the next thing they did was to do it, give you another liquidity, which is the resistance that we have in right here, and we still have this fair value gap from the daily time frame that is above the area resistance. So now, what is your mind telling you? Now I know your mind tells you that since we have it to that, we will refer this as a break of structure. Fine, it's your choice, right? All right, and the next thing that you will do is, most of us, we actually mark this to bearish candle as our order block. Most of us will like to mark the last bearish candle as the order block because that is the candle that was sold in order to buy liquidity, so a sell to buy candle. All right, so that is how I understand my own order block. It's sold to buy what? Liquidity. That's how I understand the sell to buy candle. Sell to buy liquidity, and then we deliver the orders into this area where we have liquidity also. All right, so most of us, we mark this one also has an order block OB, and some of us, we use this one right here. Okay, so the next thing that we do is we go down to the forward time frame. Now this is where I'll explain what I want to explain and end the video. Now to me, I know that I am seeing this drawdown right here, but what I'm actually seeing is not a bearish trend. Why? It is just a drop, a single drop. I don't know how to put it, but it's a single drop. All right, now this drop did not violate anything called a bullish trend. All right, so that means, what if I have to mark swing point of highs and low? This is my low and this is my high. Okay, that is my low and that is my high, and I've gotten what I want. All right, so any other thing that I'm seeing on 5 minutes, 3 minutes, 2 minutes, 45 minutes, I am not paying attention to that. This is my own projection of what is a high and what is a low. This is my low, this is my high. So this pull down or draw down backwards is me watching it and expecting it to give me a new low that I can identify as a higher low. All right, most of us, we say it's a higher, we call it a higher low, right? Now, when that low is formed, I'm expecting it to go higher. Now, when it does something like that, then sorry, good. All right, so when it trades downwards and show the rejection to go higher, breaks this high, then I'll be watching the price to say, all right, so that means this is trying to print higher high and higher low for the purpose to be drawn to the buy stop resting on previous month high. Okay, buy stops resting on previous month high. Now, when we swept liquidity from this low, I told you guys that I told us that from the daily time frame we filled up sell side inefficiency. This is the sell side inefficiency I showed from the daily time frame, right? The price trades into it the first time, didn't show a structure, a violation of a bullish trend to go bearish, right? It just gave us high and the low, didn't break this low, so we are not gonna sell. All right, so it traded back high again into the inefficiency, filled it completely, so lower, did not break any bullish trend, did not shift bearish yet, because what we're having now is this high, this low, this high. It gave us this low, right? Then it trades high again, trade deeper the more, right, into it, then trades lower, comes back, sweeps this low, give us these dots, this swing leg, right? Didn't even go to this low, go to this low, it ranged. All right, then after that range, took that liquidity, it finally bought impulsively. All right, so now we are just waiting patiently. Probably I'll wait for Monday to be true, and we see what will happen on Tuesday. All right, so for now, nothing is confirmed. All right, the only thing we have seen here is this low and this high. Now I'm ignoring this fair value gap to respect. All right, I'm ignoring is to maybe saying that maybe Tuesday we trade higher to take out previous week high, because these are previous week high, right? So I'm avoiding saying it we go for previous week high, trade the fair value gap, we push the price lower. All right, because I don't actually see what we convince me to say the fair value gap, we actually respect that. All right, so possibly Tuesday, if I'm expecting it to protect this low of previous week, then I'm expecting Tuesday to not even go below that low. All right, so maybe Monday, today, which is Monday, probably go lower. Tuesday form something to shift the trend, all right, to go bullish, then targeting that high, and we still target the buy stop. All right, and I am also avoiding going down to lower time frame to avoid confusion. All right, so avoid confusion. So the reason why I will not be able to say, oh god, I'm gonna sell, because I'm seeing this massive sell, the reason is because I am seeing this liquidity and this fair value gap above. Also, that is an inefficiency. So me selling from an area resistance is something that I'm saying is risky. I don't want to take that risk, all right, to avoid it. And also, I did not even get in at the beginning. Why will I dive into the market when it has traded like 50%? Why will I get into the market in the middle, or when it is running away, right? So we need to be very, very patient and disciplined. That is what we need to go throughout this year. All right, so not doing anything stupid or anything foolish, so avoiding getting into the market currently on good, because of what we have resistance level, which tells me there are stop losses right here. This is liquidity, and also cannot get in because I didn't get in the first time from the top, doing that particular time. All right, so now we patiently sit and wait for what? Tuesday. Possibly Monday could do the big move. We don't know, and I didn't even check calendar. So yeah, didn't even check calendar for this week. All right, nothing serious. We have Euro CPI. We have Chef CPI. We have, oh, Wednesday we're actually having unemployment claim and ADP non-farm payroll, FOMC meeting, impact news on high impact news on the New York session, right? And then this one, I'm not sure if this one will make sense because 8 p.m. is actually during that New York close time, right? So that is it, guys. So not as seeing a bearish trend, all right, because it is still maintaining that bullish look, right? To maintain a bullish look, but in this scenario, it paused for a while to range. All right, so still looking inside this house. This is an order block. All right, I cannot take that risk to sell. Why? Something obvious is there that could possibly reject that. All right, so we see it go into that. We see if this order block respects it, and we go for that previous month high, and that is it, guys. Okay, so previous week high, previous week low. You can still use a Fibonacci, those that use Fibonacci from the high to the low. The order block is around 61.8 Fibonacci level, so that makes sense. All right, so that is it, guys. We keep looking at the chart. All right, so I think I'll be active on YouTube this year back to back. So that is it, guys. Take care and be safe.